Today we're going to be learning about how to read and use financial charts, Forex charts, stock charts. We're not here to discuss how to build strategies on them. We're not here to discuss how to put lines on them or, how to start using them in your trading. We really want to get down to the basics, okay? Because I find even the most experienced trader doesn't really know how to use all of the tools or the little buttons on all of his charting packages. Okay, so to understand patterns and make sense of all the chaos in the financial markets, we need a way to visualize and interpret what's going on. In trading, we use price charts to analyze the historical and the current behavior of traders. It is the very first tool that traders see in their career, a naked price chart. A chart is a visual representation of a financial asset's price over a set period. Immediately, you can see the trading activity that took place within a specific time period. Hence, it's crucial to know how to understand Forex charts. While complex strategies and systems may work for some traders, understanding price action is all you really need to succeed in this arena. Price action analysis is an effective approach to trading today's markets, whether you're trading stocks, futures, options, cryptocurrency. Trading charts are an important aspect of technical analysis that allows traders to study the price action of various technical or financial assets. This helps to analyze price movements, identify entry and exit points in a trade, and decide where to put your stop losses and take profits. But before we can do all that, we really need to understand how to use our charting software. Now, the purpose of analyzing trading charts is to figure out the trend direction, momentum, and volatility of an asset. When there is data plotted in a specific direction, traders can identify an overall direction that asset's price is moving towards. However, some trends can be difficult to spot, which is why traders often use multiple chart types to carry out closer analysis. So let's talk about some charting basics before we're looking at any decision making. Charts are a Forex trader's best friend. As a Forex trader or an online trader, a cryptocurrency trader, or a stock trader, you will most likely utilize your price charts more than any other available tool. Since your charts are going to play such a large part in your trading, it's imperative you become familiar with them. The more comfortable you are with using your charts, the easier it will become to become a successful trader. So today we're going to start from the beginning. So let's start from the very beginning and take a look at how a price chart is set up. Once you understand the basics, you will be much more successful in applying more advanced concepts to your technical analysis or your market understanding. Now, today we're going to be using different live charts or screenshots I've taken of different live charts, predominantly from TradingView. Now, all of our modern HTML charts, whether you're using charts provided by a brand, whether you're using TradingView charts or whatever charts you're using, they all have similar actions. They may be laid out differently where a button or an icon might be across the horizontal, not the vertical. But they're all going to have the same availability. You just have to figure out or find out where it is on your chart layout. Now, all Forex charts are built on two axes. You have the x-axis, the horizontal axis, and the y-axis. Okay. Horizontal, vertical, x and y. Now, the x-axis runs horizontally along the bottom of the chart, providing a timeline for everything that's happened on that chart. The most recent price action is shown on the right side of the chart, and the most distant price action is shown on the left side of the chart. Right is your trading window, like I say, all the way to the very right is the wall. Okay, imagine Game of Thrones. That's that wall there that they got a ice wall they got to go through. But you could, that's the future. You don't know what's there. To the left is all the historical data, everything that's already happened in the past. The y-axis runs vertically along the side of the right side of the chart, providing a price scale for the price movement on that chart. Lower prices are shown towards the bottom and higher prices are shown towards the top. So in other words, an asset moves up when the euro fell all the way down to 99 cents to a dollar. Okay, it was all the way down on that right hand side of the chart. As it moved up to a dollar, it moved up, and moves up on that side of the chart, or falls down on that side of the chart. So on the y-axis, we're seeing up and down movement in the chart. Left axis is showing us the historic value. So when you put the two axes together, you can see what a currency pair was trading at a particular time in the past or currently. Now, each chart you look at is going to offer you many tools, many variances, many setups. Okay. Here we're looking at the standard trading view. Across the top, you're going to see the asset name, the time frame, the indicator, and the chart type. Okay. On the left-hand side, we're going to see all the different drawing tools. You're always going to see on almost every chart, on the left, upper left, is the name of the asset, the time frame you're looking at, and the open, the high, the low, and the close of the most current time frame. Now remember, everything you're looking at a price chart is tied to the open, the high, the low, and the close. Every indicator's calculations are encompassing the open, the high, the low, and the close. After we see the drawing tools, and there's some drawing tools, and each chart service has something slightly different, but they're all going to be there. One of my most important ones is the little lock down here that allows me to lock my chart, because I'm constantly dragging, on my charts and not realizing I'm moving things I've set up. So I'm constantly locking everything in place. Okay. You also have towards the bottom the time intervals. You have time frames and time intervals. Time intervals are what you're showing the data across your charts. We also have our ability to enlarge and to make our charts grow or shrink depending on what we want to see on our charts, and also moving to the left and the right, the farther back the historical data. Okay. Now, one of the most important things is the time frame and the chart type. And we're going to be spending a little bit of time today looking at time frames and time charts. Chart types and time frames. Okay. Also, on the left is your choice of all the drawing tools. Most everybody offers you a wide variety of these tools. Okay. TradingView offers about the most extensive. It's one why I use it, but I'm not endorsing TradingView. It's what I use because I teach lots of classes, and I'm able to teach all of my classes from TradingView. We also have indicator selection. You're going to find the availability of indicators. Most charting services today offer 50, 60 indicators, all you could possibly need. Okay. And it's like Bollinger Bands and bullish engulfing, and these are all what I have set up and saved in my favorites. But if you click on the indicator button, you're going to see hundreds of indicators. Now, when you click on this indicator button to add the indicators onto your chart, and this is just something I'm going to dilly-dally over to because it's a personal thing I like to comment on, is today we've offered all of these modern charts that offer these modern indicators that they're done by developers who don't know trading, and they've given us way too many choices. So when you click on an indicator, in this case we clicked on the indicator, we selected moving averages. Okay, it's going to open up an indicator setting window where we can set everything we want to set. And like when I learned to trade, a moving average was always set based on the close. Well, today we can set our moving average on the close, the open, the high, the low, the high low divided by 2, the high low close divided by 3, an OHLC divided by 4, an HL, too many choices. But everyone's going to give us our indicator settings and our choice of indicators. We can set colors in here, we can set visibility, we can set everything. And it's always going to show us on our chart setup the indicators we have on here. So here we have a moving average, 9-period moving average based on the close with with a smoothing average of 5. Okay, we set everyone and we'll always see them on our charts based on how we've set it up. But this is very important, understanding how to put your indicators on the charts. But also what's very important are time frames. Most traders, unfortunately, that I meet today don't understand time frames. They say I trade in I use a 15-minute chart, a 10-minute chart, a 5-minute chart, and mostly for online trading, our trading styles are very fast. So we're going to be using short-term trading frames. But Forex charts give you the ability to analyze the price movement of your favorite currency pair anywhere from minute by minute basis to month by month basis. You have the flexibility to choose which time frame is best for you. If you are a short-term trader, you will want to use shorter time frames on your charts. If you're a long-term trader, you want to use longer periods. For example, a trader is looking to quickly jump in and out of trades for 10 and 20 pips profit would likely want to be watching 1 minute and 5-minute charts. A trader who's looking to hold on to trades for a longer time period may take advantage of larger price moves, would most likely want to be watching on an hourly or daily basis. But some traders even choose to use multiple time frames so that they can see how the movement of currency pair look from various points of view. And this is one thing that a lot of traders then do, is by combining multiple time frames. You can look in an asset for a short-term view to understand what it's doing right now, but you should always be looking at an asset for a longer-term view to see what it's environmentally doing, and a medium-term view to see where the trend is kind of holding out. And you can do this by a lot of charting servers will allow you to drop several different time periods onto one chart, so you can see 3 different lines. To change the time frame on your charts to the best matching your trading style, click on the bottom of the top of the chart and use the drop down menu up here, and you'll select your preferred time frame. The time frame used for forming a chart depends on the compression of the data: intraday, daily, weekly, monthly, quarterly, or annually. The less compressed the data, the more detail is displayed. So you can use across the bottom, you'll find you can select the period of which you want to check the performance. You just want to see it 1 day, so you get it. If you're using a 15-minute chart and you're seeing 1 day, you're seeing it a lot bigger visual view, where you can also see that 15-minute chart for 1 week, 1 month. It's what you can see visually in front of you. It's got a difference to do. Doesn't change price, doesn't change anything. It changes what you're seeing in front of you. So if you were looking at a 1 week chart in a 15-minute period time frame, well, you're seeing an awful lot of data stuck in front of you. Where if you're looking at a 15-minute chart for a 1 day period, it's expanded out, so visually you're seeing something easier. You can adjust it, you can move it all around you want. It doesn't change any of the prices. It changes the visual representation. Each of these periods can be used based on the kind of research you are conducting with respect to the stock or the Forex pair or the cryptocurrency. For example, an intraday trader can select a 1 day or 1 week to assess the stock's recent performance and make trading decisions. However, long-term traders would want to look at a 3 to 5 year to assess performance on a stock over different market cycles. Now, once you've selected the time period, you also need to select the interval at which you need the chart plotted. For example, if you selected the time period as 1 day, then you need to determine if you want to see the data points to be plotted every minute, 5 minutes, 10 minutes, 15 minutes or so. So in other words, down at the bottom here, you could select a 1 day, a 5 day, a 1 month, or 3 month, and then you select the time frame that you want to see for and you can select 1 minute, 5 minute, 1 hour, 1 day, you know, and you select, and that's how it compresses the data you're seeing on the screen. Like I said, it doesn't change anything except what you're seeing. So Forex product charts give you the ability to analyze the price movement of your favorite currency pair in various formats. You can check from line chart to bar chart to candlestick. Okay. Now, technical analysis is a visual, almost artistic skill that traders develop, and different traders like to practice their art on different types of charts. Some traders feel they can see and analyze support and resistance levels better on a line chart, while other traders feel that they get the more information on price movement on a bar chart or a candlestick chart. Now, technical analysts tend to gravitate towards three of the following charts. And let's redefine the word technical analyst. I say throw that word in the trash and let's call them chart analysts. Because technical analysis is everything and anything we do on a chart. And therefore, everything is done on a chart. So what are we doing? We're chart analysts, analyzing what we see on charts. And there's three popular types of charts. Okay. There's many other subsets, but the three popular are line charts, bar charts, and candlestick charts. Today, most traders use candlesticks because a line chart is a simple line that's plotted using the close of each price period and doesn't give us any clutter, but it really doesn't give us any information. It's the bare bones. We have a bar chart. Now, when I started trading, bar charts are what was the popular thing. Because we were hand charting, writing by hand, and we would draw a line on to show the open, the high, the low, and the close of a pair. Okay. Today, we have these modern HTML charts, and we can flop back and forth from bar charts to candlestick charts, and I do this all the time. Because sometimes I want to see something and the colors in the candlesticks are camouflaging stuff and I want to see it clearer, so I'll go back to a bar chart. But a bar chart shows us the high, the low, the open, and the close for that particular time period we've selected on the charts. Candlestick charts provide the same information as bar chart, but just in a slightly different format. Technical analysts often use candlestick charts instead of bar charts because they're easier to see and identify various patterns using candlestick charts. You create a candlestick chart by plotting a series of candlesticks across the chart. So just like the bar chart, this is the same exact chart that we saw, and I just flipped the button and changed the candlestick. And we chart the open, the high, the low, and the close. But what we do is, instead of just drawing a line, we make a body between the open and the close, and then these are called wicks to give us the high and the low. So they give us a very good graphic depiction of what price is doing, where price has been, easier to see than a bar chart. But you become familiar with each one. But today in our type of trading, candlestick charts are the most popular type chart. Now, each chart type has its own advantages and disadvantages. The advantage of using candlesticks and bars is that they are easy to read and provide a wealth of information about price action. They are a powerful tool, and your eyes will start to see and pick up subtle clues as you progress in your trading career. The combination of indicators and charts you'll end up using will be unique to you as a trader. Your preference will be decided not only by which tools work best for you, but also your trading outcomes. It's wise to start with the basics and slowly work your way to implementing different technical analysis techniques in your trading. So that's all for today, folks. We have lots and lots of videos on all the different indicators and oscillators. But I wanted you to understand the basics of what your chart can do before you get over to trying to read what price is telling you. From here, you should go look at adding lines to your price charts, support and resistance lines, chart patterns maybe, as well as trend lines. Slowly move into this world of charting analysis and build your knowledge base. So thank you very much. And that's all for today, folks. Have a great day. Bye now.